weekend, all. Ira Epstein of Linn and Associates with your weekend edition of your SPDR ETF wrap-up. And in this wrap-up, we start off with and stay with weekly charts only. So for those of you that like the longer-term look in the market, instead of the day-to-day looking, this is one of the ways. I've already put out the update for my paid subscribers, so they have them, and they get 40-some-odd charts in them. But suffice to say, the elephant in the room was the jobs data report on Friday, and it came out with only 266,000 jobs. The estimates were close to 1 million, if not. In fact, there was talk, are we going to be at 1 million this month and then 2 million next month? That was all the talk. I was watching CNBC 30 seconds before it came out. They were doing a lightning flash thing, going, what do you think, what do you think? And the guesses went as high as 1.5 million. 266,000 is not 1 million, and taking down the prior months from 900 and some odd thousand back to 700 and whatever, those aren't them. So what's really going on here? Because we are adding jobs. There's a positive to that. Here's the negative to it. When you pay people enough to not work, they don't work. You don't have to agree with me. This isn't a political show. All you need to do is take into account the weekly benefit, the $300 a week that you get with the add-on from the federal government, and you're making 600 and some odd dollars, whatever it is. That's more than $15 a week. An hour rather, that you're making. And many of the jobs that people would be going back to in the service industry pay 15, 18, whatever it is, an hour. Some much lower than that. Imagine if you were there at the Walmarts and so on that we used to pay lower. And there are plenty of stores, your local stores, they're not paying $18, $20 an hour typically. So why am I going to be on my feet all day? Why do I have to put up with people? I'm not going to do that. I'm not going back into that hot factory. The summer's here. Why am I doing that? And I know you don't have to agree with me. The numbers agree with me. And that's what it is. And I know the Biden administration came out saying I'm wrong. The U.S. Chamber of Commerce came out and said that I'm right, and there's other economists that think that. Listen, nobody planned this extra money to create this. It was there and passed to help people, not hurt them. And every time you help, there's always a twist and turn to it, and that's what it is. Suffice to say, I don't want to get into the political part. Suffice to say, this runs out in September, and I don't see how politicians walk it back. So we'll see what we have to deal with. When you look at ARK, this has been the darling, if you will, of the markets, and you know, we should understand why. This was back here in December, a market that was $60. It ran up to 150, 150 plus, and now it's given back $50, $60 from there. Okay, but it's been a phenomenal run-up. It's a friendly stock of those that are on Reddit and the others and that want to be in the tech and so on. I get it, but it's not trending. It's got a higher high, lower low, and for the week it was down 9%. So even though it was up on Friday, so what? Still down 9%. When I come to XLK, the tech sector, as you can see, you had an outside week down the week prior, and then you followed through with that this week. So that gave you a pattern of a higher high and a lower low. That is not a trend. If you're looking for a downtrend, you should have lower highs, lower lows. That's not what you're getting. Nor is it in an uptrend where you'd have higher highs, higher lows. The uptrend was fine until you got this pattern of the reversal down week, and now you've destroyed that part of the chart. The market does have, however, upside bias. It is staying over the important level of 134.73, which is proven to be what? A support number, a number where the market likes to fight against to figure out what to do next. So that is something to pay attention. What went on Friday that could help the tech? Well, tech is very capital intensive. And if interest rates aren't going up, and remember, the Fed has said what? They'll end their bond buying program, and they'll give us signals of that before everything else. So they're going to taper before they raise interest rates. 277,000 jobs isn't a big enough number in a reduction last month, in my opinion, to cause the Fed to start thinking about tapering. So at a minimum, things get pushed back, minimum 30 days in the cycle. It could be longer if the next jobs number's 400,000. You see what I'm getting at? Instead of having the red hot 1 million jobs, 1.5 million, 2 million, forcing the Fed's hand, other things are at work. That's my take on these numbers. In the XLK, when we look, the Bollinger Band area was the resistance. 5% of the time, the market will stay over a Bollinger Band. End of discussion. I get people to try to argue with me about it. Read the theory, contact John Bollinger Band. It's how the algorithm is built. And I use that as a resistance point. Why not? It's only going to stay over it 5% of the time. That's a resistance point. Support, back here. Momentum in the market. Okay, the market's got both numbers over 80 this week. Last week they were both over 80 and the week before. If the market loses them under 80, the odds are you're going right to that 18-week average of closes to rebuild. Then they'll be overbought, and that's often where the market goes to. I'm not bullish, obviously. PAVE. I brought this on back at the beginning of the year for you because, you know, to me it was just such a natural. And this is not a stock pick, nothing like that. But infrastructure is what the Democrats, the Republicans, everybody's talking about. Here's an infrastructure play, and it's been going up. That's all that I'm saying about it. It's in an uptrend, has an embedded reading, hits the upper bands, breaks away, still bullish. XLI, still staying up. This is the industrial sector. How could it not be friendly, the industrial sector, when we're talking about everything going on, the coming back of the world? Forget America, the world. XLE, now there's a new problem. Colonial Pipeline was hit by a hack, and their pipeline's been taken over, the software part of it, for ransomware. Again, that's why I brought on this new ETF called Hack. I think you're going to just get more and more of these. So what does that do for the refineries out east? Do you need oil? If you can't, why would you buy oil if you can't process it? That's what I'm trying to say. But that doesn't change life on the street from driving cars. Distillates, they're going to go up because the demand's there and there's not supply behind it. That could happen if they don't find a solution for this before Sunday night. That's when the bell rings, the opening of futures, and watch out. That's what I'll be looking at. SPY, the report, bullish. You've had an embedded reading. I didn't need this report to add more bullishness, but it did it. This is the classic. If you've taken my enhanced Bollinger Band course, our website, www.iraepstein.com. Look at this. This is it. This is what that course is teaching. It's all about the Bollinger Band, when it backs off, when you have that embedded reading. EFA, embedded reading, Bollinger Band. Get up to it, you back off. Market's been in a buying mode, still staying in it. Resistance, right there, that upper Bollinger Band. That's where I think pros take money off the table. Because it's an outside week up, if over the next 2 weeks, next week and the week after, you take out this low, regardless of how high it goes, I'd be looking for wherever the 18-week average to be hit. Barring that, I think between there and on the break is where the pros are going to buy. GLD, whoa. This was gold's event. As soon as interest rates got the go-ahead to not have to move higher, everybody was on top of that market. What has been fighting in gold is the fact that the Fed's going to taper, that no matter what traders say, you know, as bearish as I am the dollar longer term for a host of reasons, U.S. rates often support the dollar. That was fighting this market. It's come back and it jumped just as that happened. The gold miners, if gold's up, you know that they're going, they went right to their upper Bollinger Band. Why'd they stop there? What's the purpose of a Bollinger Band? Come on. That's why they stopped there. They didn't stop up here. They stopped right there. SLV. SLV was interesting. It didn't go anywhere on Friday in silver and the futures, but for the week you're up 6% in the SLV. I'm bullish, have been friendly this market, been telling you I like what I'm seeing. Oh, when you crossed over, let me just show you. This is last week. If you cross over last week's high of 24.53, it's going to give you higher lows with an objective of the upper Bollinger Band. The stop would be not to get under the last swing line low. Whether it works or not, that I can't tell you. I can tell you the pattern that the swing line develops. Again, this is taught in my charting course. In TLT, you've lost the bearishness in the market. Now, the lower this goes, it's higher interest rates. This market started right here, came out of its embedded reading, bearish reading, April 16th, and it kept it. So that means a challenge potentially of the 18-day average, 18-week average, I'm sorry I said that, is in line here. Hasn't done it, but it wouldn't surprise me. To say that's not going to happen, because you have to have a counter. You have to have, any rule you developed has to have an out. It's not working. If you take out the low of this week, which is 137.13, that changes everything. Until that's taken out, price and the 18-week average are likely to make a run at each other. The first support under the market, the 200-week average at 136.15. Last, FXE. Go ahead, go signal. Don't have to worry about U.S. interest rates in the near term. Away you go. Where's the battle? This is how you looked up until then. And you know what I tell you? When the market comes up, it often goes back to an 18-week average to fight. If you didn't want to get out at these Bollinger Bands, and this is where the first area was, the 200 offered the support. Now the market is thrown out until, in my opinion, until this week's low of taken out in the next 2 weeks, the potential to get back up here to the 115.20 area. So I talk this in the mornings. At 8:40 in the morning, the reason I choose 8:40, I want the algorithms at 8:30 to get back into the market and the spiders and ETFs. So at 8:40, I start I put together my numbers and I typically try to start recording right at that time. Videos each Monday through Friday with both talking to you. Day action, swing action, longer term action. 3 types of actions. I'm going to look at weekly charts, but mostly day charts during the week, and then on the weekend, just weekly charts. Example, I put those all out last night. I cover now 40 some odd markets. I'm always adding, like you're not going to see ARK up here. I just added ARK, so we'll have to go in and do that. But uranium, I cover a lot of the markets that you want me to cover in all that. The cost, well, I try to price it to coffee. You know, a lot of people will go out to have a couple of coffees, minimum a month outside. Drinkers, yeah, talking caffeine people. So let's assume they're $4.65 at your Starbucks, and you give the people a buck tip or so, so it's $5.50, whatever you're going to do. And you know, I'm a generous tipper. Other people may not be. At least $5. $8.95 for 30 days. You're getting something every day. I'm giving you your caffeine. And that caffeine's coming out with specific buy here, sell there, do it on a weekly basis, do it on a monthly. Here's your stop order. Here's what I'm seeing. I cannot do that in these videos for a host of reasons that are regulatory. In addition, I want to be paid. So I don't want to put pay on YouTube. I can do it on my websites, I can do it in our apps, and I do it that way. Go to my website to view what we do and how it all works. Under the word research, you'll see the different products, and under education are the courses that I offer. You have a